Good morning, and thank you so very much for joining us today. I am Gary Williams, Senior Client Advisor with the Arizona Manufacturing Extension Partnership, or MEP for short. We'll get started right away because we know wasted time is one of the 8 wastes we find in every business. If you don't know the other 7, contact your MEP advisor and they'd be happy to share with you how we can save you from wasting time, actual money, and other resources. Our webinar today is Preparing for Market Recovery. It's part 3 of our 5-part series on supply chain management, and it will be recorded so that you can binge watch this later at your convenience. Our mission is to help Arizona manufacturers be the most successful business they can be. With our relatively small team shown here, and our third-party partners, we can bring a variety of services that can uncover hidden costs and bring you immediate value. So the way that the Arizona MEP is structured, we're a partially federally funded not-for-profit program, and we're overseen by NIST, the National Institute of Standards and Technology. Some of the MEP centers are standalone, some are with the university, and some, like ours, are with the government agency. Here in Arizona, the Arizona Commerce Authority holds our grant, so we work operationally through the ACA, and it's what gives our program the opportunity to bring you these informational webinars and help you get a competitive advantage during and after this pandemic. Now, our performance is measured by NIST, and our funding is reliant on the impacts that we bring the clients we get to serve. Those impacts are measured through a third-party survey that goes out 6 to 9 months after we perform any project with you. So our #1 priority is providing a laser focus on only what you need to be successful. I usually hear a sigh when I begin reading these first slides, but I'll try to keep it brief for those who may be attending by phone and can't really see the screen. National impacts recorded from last fiscal year are almost 115,000 jobs created or retained, $15 billion in new sales, $1.5 billion in cost savings, and about $5 billion in new investments. Some of the biggest challenges, I'm sorry about that, I'm going through here. There we go. Great. Some of the biggest challenges reported across the US are cost reduction, employee recruitment, growth and product development. And that survey that I mentioned also asks how we were as a center to work with. So across the nationwide network, MEP has a net promoter score of 85, and we're very proud of that score. And we like to help our clients maintain a competitive edge here in our state. So on the business excellence side or front end, we help with R&D tax credits, energy audits, HR support, strategy development. Today's webinar actually complements your strategy, P&L and cash flow, organizational excellence, and export tech. We have the best award-winning program in the nation, yes, I said it, to help companies who are ready to venture out and sell their products internationally. On the operational excellence side, or back into the business, we really encourage you to look into these main areas, and if you need help, we can certainly look together. We have a strong lean manufacturing program, from basics of Lean 101 to doing Kaizen events on your work processes, to find where to reduce scrap and waste, quality certifications, ISO, AS9100. We help companies get certified so they can take on new clients who require these certifications. Safety programs, including OSHA 10, OSHA 30. Solder training is brand new. We just added a provider in this area. And if we don't have a readily available solution, we can tap into thousands of vetted national MEP providers throughout the US. MRP, ERP development, inventory optimization, shipping service cost reduction for all shipping providers, including containers, workforce development training to improve your human capital. And a quick note before we get to the reason why we're here today, the Arizona MEP was awarded CARES Act grant funds specifically to subsidize approved projects that we do with manufacturers who were negatively affected by COVID, or who also started making personal protection equipment, or PPE, like gowns, masks, hand sanitizer, etc. So I urge everyone to apply, even if you aren't sure if you qualify, and please share this information with every manufacturer you know. And then lastly, supply chain, which is what brings us here together today. So if you have any questions, please put them in the Q&A so that we can answer them. If you find today that you're not as prepared as you thought and have some work to do so that you can strike while the iron's hot in 2021, just reach out to your advisor or get in touch with us at azmep.org. So with that, I'd like to introduce our esteemed expert, Seema Full, Principal at ForeOptics Transformational Leaders.
Thank you very much, Gary. I'm going to go ahead and share my screen. And if someone could let me know that they can see my screen, that'd be great.
We got it.
Okay, great. Let's see if we can get into presentation mode. Good morning, everyone. Very nice to be here and speak with you today. I'm joined here by my partner, Lynn Borick. Lynn and I both run ForeOptics, and we have tremendous background in aerospace and defense, as well as high-tech industry, consumer goods, electronic manufacturing, and so on. And yes, we both started as child labor. So as you can tell that we're gonna walk you through what we're seeing happen in the industry. We're gonna start with what we're seeing in terms of what's on the horizon. And we're going to share with you some strategies and thoughts that we believe are going to be helpful to you as you start to prepare for the market recovery and as you start to respond instead of react to the market recovery. So without further ado, here's just a quick introduction. Lynn has an extensive background in both A&D as well as electronic manufacturing. She's got a background in business growth, product development, and strategy. So she does what I call sort of the front part of the business, which is all about looking at business development, looking at growth, looking at new products and new markets. And I handle the back end of the operations, which is looking at supply chain management. How do you take cost out of your operation? So she's all about how do you grow the top line. I'm all about how do you reduce cost so that together we're able to improve the bottom line performance, EBITDA and inventory and cash flow for our clients. So we're going to tag team this presentation and we'll get right into it. Lynn, anything you want to say before I move on?
No, other than I started when I was 5.
That's right. I waited till I was 7. Okay, so let's talk about who we serve. So ForeOptics is a full service supply chain company, and we provide advisory services. We provide process, technology, and restructuring solutions to our clients. We've worked with clients all over the world, and some large clients, some mid-sized clients, and some small companies. So we partner with private equity firms to help do due diligence and post-merger integration for their transactions. And so we're one of those folks who really coach our clients, and we partner with our clients from the very beginning all the way up to the end of the of their initiative. So we're not it's hard to put sort of a wrapper around just exactly where we start, where we begin, because each client needs are different and requirements are different, and we tailor our solutions to their needs and requirements. Okay, so let's talk about what's happening in the marketplace. So as we were preparing for this webinar, both Lynn and I sort of thought about it and said, well, between the two of us and many of our team members, we've been through many recoveries and many downturns. However, this one is a little bit different, as I think most would agree. But what we're starting to see is that there are signs of recovery on the horizon. For example, the U.S. manufacturers, sort of at the beginning, the April timeframe, their capacity utilization was down to 59%. And as we approached fall, we started to see uptick at about 70%. So they're getting back to business. Automobile sector of the market is operating and filling backlogs that they had from the last spring shutdown. High-tech manufacturers, demand is at all-time high because of the requirements that have been placed on them for technology. Manufacturing sector recovery, one of the things that we look at is that from a GDP perspective, manufacturing only accounts for about 11% of the GDP, but it fuels about 20% of economic growth in the last 15 years. So it's a very important indicator for economic growth and economic, improvement on the horizon. One of the areas that continues to struggle is aviation manufacturing. The recovery will be slow based on what we're seeing. It looks like it'll take some time to get back to rate. Boeing and Airbus are working hard, but it's going to take some time. So Lynn, let's talk a little bit about what you think is different about this market recovery or these market recovery signs than those that we've seen in the past.
Well, I think this one is deeper and will potentially be a bit wider than we've ever seen in aerospace and defense, certainly. We have 70% of our overall worldwide fleet grounded right now. That kind of makes you swallow hard. But on the other hand, we see both Boeing and Airbus building at a rate to sustain its supply chain. And what I mean by that is they're committed to build at a rate that would put 100 to 200 whitetails on the tarmac, waiting for someone to buy them. And that is a signal to all of their suppliers that they intend not to let the supply chain collapse. And so I think there's some good news and some tough news. I think right now the consensus in the industry is it's going to be about 5 years before we can celebrate that aerospace is back. I think it's going to be 2030 before we see the likes of a fleet of 39,000 type aircraft. But on the other hand, they are recovering, and their emphasis and their focus is in the right place. Our economy, our aviation in general has been very resilient. If you look at the 911 recovery, we bounced back fast. But it's dependent upon us focusing down on the right building blocks for that bounce back to come back, but come back more profitable than we have been experiencing currently. I think we all need to watch the A320 because she's going to lead us out of this. It's for the U.S. Folks, that's sad because we're used to watching Boeing lead us out. But most of the Arizona aerospace and defense industry has a very strong position on that aircraft. The A320, A350, and now the 737 MAX are going to be the leaders coming out of this, and we need to watch that carefully. And as sad as that all sounds, I think there's a lot of opportunity if we stare at it carefully.
Right. So that's a really good point. What we are going to share with you today is, where are those opportunity points and how to maximize on those opportunity points and really come up with a methodical approach for your business and not just looking at the top line, but most importantly, looking at the bottom line, because there's no point in bringing revenue that causes negative profits, right? So that's something that we're going to focus in on today. So, in preparation for this webinar in generally, we like to watch manufacturing industry output as a tracker because it tells us where we're headed. So if you'll see this chart on the right, this is from I think the November issue of the manufacturing tracker. So the interesting thing is what we're seeing is that the global manufacturing industry output is up by 3%, and that's good news. So we're starting to see that we went from negative 7.8% to, we're still negative, but it's 4.8%. So the forecast, compared to our forecast, we are up. What we're also seeing that we're expected to continue to rise both in US and in China. We're going to see some continuation of sort of lagging behind in Europe. Big reason is obviously the automotive piece and the metal productions have been severely impacted by COVID. However, there are some bright spots in Europe. You've got textiles, electronics, and wood productions that are actually performing better than what we expected. Obviously the worst hit areas from the pandemic happen to be, obviously Brazil and India, who have faced the worst 2 months of production in April through May. But what we're starting to see is that, those are turning around as well. India is opening up and we're starting to see impact, less and less impact of the pandemic on the production sector. And we expect, the recovery in 2021 to be across most regions. However, obviously it all depends on secondary lockdowns that we are seeing now, any post-Brexit hangover, and obviously what the new administration might bring and how that impacts. So the good news here is that we are better off than where we expected. We still have some areas that we are struggling, that we are continue to watch. However, we're starting to see some improvements, and there's much to be seen as we come out of the fall and winter season and see how this pandemic, shows itself. Now, there's also vaccines on the horizon and so on. All of those will have impact on the outcome of where we end up. So what we're going to do today is let's talk about where we are and how can we actually take a step toward improvement, keeping in mind all of those elements that we have. So Lynn, why don't you kind of walk us through where we are and what we can do?
So our supply chains up until very recently have been increasingly complex. We've all been focused on outsourcing. We've been focused on lowering the cost of manufacturing by residing in other countries, moving out, really making the supply chain more and more complex. And the fact of the matter is that's not going to change. We are introducing a lot of technology into our factories, very highly dependent on digital transformation within our backbone of our companies. And so the complexity is going to remain. But now we're going to add a new complexity, which is called COVID. COVID is an unusual situation that, normally, I know in aerospace and defense, we've thought for years and years and years about what would happen if we had a hurricane? What would happen if we had a tornado? What would happen if I lost this factory? Fact of the matter is we're going to lose factories. We're going to lose it to the COVID pandemic because people will not be able to come into work for a period of time. It may get very heavy infection in a certain facility, which could shut your facility down. And so the added complexity of COVID is being able to move quickly and recover quickly within our infrastructure of our companies in order to keep moving forward, irrespective of country shutdowns, transportation shutdowns, and potentially facility shutdowns. So the impacts right now are absolutely unprecedented, and we need to be prepared for it. So not surprising at all when you focus on what everyone is saying over the last 3 years to what they're saying today. You can see flexibility is number one. Flexibility to all of us have always meant build it anywhere, do it anywhere. And as you all know, who are all working from home, that's become a reality. I mean, that's just a reality, and we're going to have to figure that out. But in a manufacturing world, how do you get that flexibility? In a business world, in an office world, it's one thing, but in a manufacturing world, how do we get flexibility? But that's key to everybody right now because resilience is key. And we're still focused on reducing cost, and that becomes important. But you can see that flexibility, really being able to deliver on time with high quality when I need to do it, and being flexible enough to do that has become critical. So it's an imperative. And I think we've got to all really focus on that because resilience is an imperative. We walked into this COVID infection with already knowing that our customers expected delivery in the high 90s, 99%, quality 99%. That has not changed. That will not change. So how do you do that? How do you stay flexible enough and do that so that your resilience of your company can rebound and grow? And that's what we're going to talk about. Yeah. So supplier collaboration with the OEM and collaboration within your own supply chain are becoming very critical. And what that allows us to do is communicate quickly, shift quickly, adjust quickly, get things where they need to be quickly. And so we're going to become more and more connected, not only to our customers, but throughout our supply chain. And the digital enablement focus that we've had for a long time has been sort of focused internally. It's now external connectivity. And that's got to be really taken a hard look at now because that's where the flexibility is going to start coming from. Anything to add, Seema?
Yeah, no, I think you hit the points very well there, Lynn. One of the things that we're, as you know, one of the things that we continue to hear from our clients is, I'm very good at doing expediting. I'm very good at doing the short-term firefighting, but help me get out of that mode. Help me get out of help me set up my supply chain such that I don't have to, that's not my only resort, and I don't have to do that over and over again. And so, some of the initiatives around digital enablement, some of the initiatives that are increasing resilience is all about understanding where the risk is and getting proactive about mitigating that risk. So we're gonna walk you through that, but that's really important as you listen to what we're talking about, and as you think about your own companies, and as you're thinking about the questions that you want to ask. I'd really love to hear from you guys in the audience is, where is your focus? Is your focus shifting in line with what we're seeing with this survey as well as with other clients? Or, are you at a different place within, the manufacturing community in Arizona, as well as, obviously there's folks on the phone and on the webinar that are outside of Arizona. So, we'd love to hear your perspective on that in the Q&A section. So now let's talk about post-COVID. I actually love this visual because I feel like it just helps you see that, there's some positive outlook out there, right? So kudos to our marketing team for coming up with this visual. But absolutely, that's how I see it. I see it as, the world will look different, and that's okay. That's okay, because that's our new normal. If you look at all of our industrial revolution and so on, we've never gone back. And this is unfortunately a pandemic, but sometimes, we innovate. Necessity is the mother of innovation. So we're going to talk about some of the innovations that are taking place. So, from our perspective, and Lynn, please chime in here. I'll kind of just set this up and then we'll go into more details, is that there's three elements to how to get your arms around where we're going next, okay? The first is a bit more tactical. Hey, let's get our house in order. Let's figure out what do we really need to do to restart the business. Then where do we have opportunities we need to reinvent? And then how do we rebalance our business such that we are prepared for long-term growth and sustainment? So those are the three pieces that we're going to talk to you about today. And we're going to go into each one of these in more detail. So sort of think about those aspects as you're listening and how they impact your business and how they might pertain to your business. So Lynn, what are your thoughts on this?
I think the most important observation that we've had over the last several months as we've been working with customers who are going through this cycle is shifting over to really being data-driven. When we say restart, restart means get to know yourself, understand your business. Where are you? Where are the improvements coming in terms of returns and earnings, and where are they not? Where is the revenue dropping? Where is it growing? What do you know about your customers? What do you know about their ability to sustain themselves throughout this market? What do you see in the adjacencies? What's happening? It's very analytical, this step of getting the restart underway. But what I find is a lot of companies, although we have strategic planning departments, we don't really spend the time to understand ourselves and really understand what the data is telling us. Look at your inventory. What market is driving your capital investments? Look at all of that, and then try to figure out how has it shifted in the last 6 months? How has the product demand shifted? How has the market shifted? What are the customer shifts doing? And where is the innovation in the markets that you currently play in? And that's really critical. Sometimes looking back over history even can help us, looking back at some other, what I call downturns or market reactions, such as 9/11. The last economic downturn, take a look at them, see what happened, learn from them, because oftentimes, although this is very different, this COVID issue, it does have characteristics of past downturns. So learn from them, take a look at it. And that's really critical to getting started on these sprints. Spend time to get to know yourself and where you're at today. So that's where the restart, one of the things I always tell people is you're going to be deep in data, but data doesn't lie. And if you look at the data, put the light of day on it, it will tell you a lot of where you need to begin to shift, what you need to be paying attention to. And then I don't know if you want to go on with Sprint 2, Seema.
Yeah, absolutely. So, again, what we've done is what we recommend to our clients, and many of our clients who've been doing this found that it's a very rapid approach that allows them to get to the answer very quickly. So Sprint 1, call it a week, 2 weeks. Sprint 2 is about, let's look at the delivery system, right? Let's look at, now that we know we have a better handle on our demand, what's shifted, why it shifted, where it's likely to shift in the future. Now let's look at our delivery system, which is not just the procurement side, but the manufacturing side, the logistics and distribution, as well as marketing, as well as customer service, because every single one of those functional areas has been hit by the pandemic. So the idea here is to say, how does our delivery system configuration look like? Where do we have weak spots? Don't forget those tier 2, tier 3 suppliers, because there are many of those folks that they've had solvency issues, they have constraints, they have capability issues. So make sure that you're reaching out and looking at all of those elements and understanding what needs to be tweaked in your delivery system so that you can restart the business. Then the third piece is around looking at what you no longer need, because that's something that we hear, Lynn and I hear from our clients all the time is, what was the most beneficial thing for us was that you forced us to look at how we used to do things and how much waste we had in the way we used to do things. And now that we've been forced to work differently and we've been forced to do this, analysis, data, as Lynn said, data doesn't lie. I always like to say data doesn't distract either, right? It's one of those anecdotal information. Well, I've been doing this for 30 years and this is how it works, can be a distraction for a business. However, when you look at data, sorry, there's nowhere to run. It is what it is, right? So what it does, it allows you to see where you can take extra steps out of a process, where you can leave markets. Where are you providing product at negative margins? Why do it? What difference does it make, right? Those elements are things that you address in Sprint 3. And then you get to Lynn's favorite step, which is decision week. How do you now battle it out? And we call it horse trading, right? So this is bringing everyone together and having that tough adult conversation. Oh, shucks.
Yeah, I would add that when you look at what no longer is needed or what no longer works, don't throw the baby out with the bathwater. Some of us ran after new technology over the last couple of years that were pretty exciting. 3D printing, robotics, additive manufacturing. And what we found is it didn't really help, or it wasn't fast enough, or it wasn't didn't solve the earning problem that we thought it was going to solve. And it didn't remove the people out of the equation like we thought. Don't throw those out. Figure out why they no longer work. You probably put them in a place where they're no longer needed. But maybe picking it up from here and putting it over here, it was a good idea. So be careful when you look at what's no longer needed, because chances are the way you implemented it was fine a year ago, but not now. So take a hard look at that. And that decision week really becomes the debate of where do we go, what do we do next, and how do we restructure or reinvent ourselves.
So one of the things that when we sit with our clients, we facilitate this, the last step is the most difficult. So it takes a lot of change management, and it actually takes a lot of leadership, support, and skill to get that going. So that's something that you need to think about as you're putting this process in place, is that really get everyone thinking about decision week, because everyone will come with data, everyone will have a dialogue, they'll love to debate. But the D word of decision seems to be something that, it seems to be elusive in many organizations. So that's something that I would say is that make sure you've got your OD people in there helping you to facilitate this, or, an outside party that helps you facilitate this and forces your organization to make decisions. Okay. All right. So let's move forward here. Our next step is reinventing. So reinventing means a lot of different things, Lynn. So Tell me a little bit about what your perspective is on reinventing.
Well, reinventing is really tying out your current markets, taking a look at what's going on, interact with your customer, your suppliers, your employees, find out what really has changed for them. Take a look at your connectivity to them, take a look at what's happening to them in their markets, and look for those unique areas where they could really value your help. Oftentimes, just as an example, for EMS manufacturers, sometimes delivering directly to the OEM will help, because now we've got a shipping and inspection problem in the intermediary supply chain. Understand that, really look at it. Find out where they're remotely working and where they're not, and what you can do to facilitate that. Oftentimes you'll find unique services that you can provide for those customers that you weren't providing before, just because of the uniqueness of what's happened with COVID. Cybersecurity, as you guys all know, has become hugely important. As we move to more collaborative, those of us that do engineering, design, and development and product development, cybersecurity is absolutely a lifeline for us. We cannot lose our IP. And so focusing down on those interconnections with the customers, the collaboration in design, the collaboration in delivery, really getting those understood of how to interact and connect to the customers and suppliers. Take a look at how to leverage your global footprint. Oftentimes when we hear that, we say, oh, let's outsource. Let's go to a less expensive place. What we've found is you're only less expensive for a short period of time, because everybody runs there, and then we drive the cost up. And right now, because of borders shutting down, of COVID, of all of those kinds of things, your global footprint needs to get reassessed. You need to look at the cost and the efficiency and the geopolitical pressures that are really being brought to bear. Probably the best example we have right now is China, where your footprint is. Ask yourself, should it adjust? Are you in the right place? And is your global footprint able to talk and connect in and integrate into the rest of your footprint? The answer is no. There needs to be some reinventing there to reduce your cost and to increase your flexibility. If you look at your smart manufacturing trends, as I mentioned before, we have more and more clients going to robotics and additive manufacturing and 3D printing, and applying it in some very, very unique ways. We have one client right now that is bringing robotics into his manufacturing floor. He's an EMS provider, and you wouldn't think of him as using robotics like you would see maybe at a Boeing with the exoskeleton robotics. But what he found was he was losing employees periodically to higher paying or high overtime jobs, and then they'd come back after those jobs were gone, and he had an instability of his workforce, and this robotics introducing it into the line could remove that instability, and it actually created a much broader job of the people supporting it, and now we have stability in that area in his manufacturing floor. So never would have applied robotics there prior to really analyzing it, but now it makes a world of sense. Life is different now, and take a look at, but don't throw robotics out. Take a look at where you've applied it. Is it in the right place? What's your data telling you? The same way with additive manufacturing and 3D printing and blue scan design development, all of which is coming very, very quickly into our markets because of re-engineering that has to happen in some of our obsolete parts. That's very real, very valuable, very expensive on the front end, but if you apply it in the right place, you're going to find that that's a huge uplift and a lot of time removed off of your scarce engineering resources. Those are some examples. Do you want to share some others, Seema, on reinventing?
Yeah, absolutely. Thank you. So, a couple things that come to mind for robotics specifically is look at robotics can be collaborative with your human resources, with your workers. They're not a replacement necessarily all the time. That's a big aha that our clients get, is that, oh, so it's thinking about repetitive tasks that can be taken over by a robot. The interesting thing is the information you get, the analytics that you get from that allow you to actually improve the entire process, which includes utilization of your human capital. So that's something that we're seeing, is that this trend toward collaboration with robots rather than replacement of full-time employees. And then you're able to use that human capital in a much more strategic way than doing those repetitive tasks that can be done by a machine. The other piece that we're seeing is with obsolescence, inventory obsolescence management, right? Is that 3D printing is giving us alternatives for areas where you thought you were stuck, either because you have suppliers who own your IP and are basically, lack of a better term, not that anybody does that, is holding you hostage with a huge price tag. No, not that anybody does that. But if they did, that would be a huge problem. Now, 3D printing provides an alternative to that. And we're seeing many of our clients, especially in the aftermarket space, leveraging that reinvention as a capability that helps them improve their flow of goods. The other thing that I will say is that, sort of what we make and how we make it and where we make it. And that goes along with the footprint piece, as well as around looking at your extended supply chain. Many of our clients, we're helping them use analytics and data to really get an understanding of where the risk sits in their supply chain. And then we take a step back and say, how do we mitigate that risk? How do we solve for that risk through reshoring? Okay, and that reshoring doesn't always mean that everything has to come to the US, has to come back to the US. For many industries and for many products, US is a viable option. But for many others, there are many other more viable options than the US. We're actually going to be doing, I think, Gary, if I'm not mistaken, our 5th series of this, part 5 of this 5 series is about reshoring. And we're going to be talking a lot more about that. How do you get your arms around reshoring? How do you think about that? But what's really interesting is, in the midst of this pandemic, there's reinvention going on around the IP concerns, as well as what we're building and where we're building it. And there are many things that we're building that when we take a step back and say, why do we do that? Somebody else can do that much more effectively and at a much lower cost. So let's rethink that. So those would be some of the areas that, Lynn, I would add from a reinventing standpoint.
Yeah, I think I would add one more thing too, is one of the things with additive manufacturing is the fact that in our market, the tier 3s and tier 2 suppliers, they are going to collapse. There is going to be less suppliers. That's just a fact of this recovery. One of the things additive manufacturing allows you to do is to absorb steps and absorb areas where you've been very dependent upon other suppliers in order to deliver to you, and then you build up from there. They also can take out very expensive steps within the development process. I think you have a manufacturing team there in Arizona that is playing around with additive manufacturing and alignment of copper as they build boards up right now for RF. So what? Well, that took out the huge amount of testing and tuning of RF that no longer has to happen.
Right.
They're removing the suppliers out of the supply chain that they were heavily dependent upon in order to pay for the slightly more expensive additive manufacturing, but now it's completely under their control. So it goes back to look at your adjacencies, which are both your suppliers and your customers, and figure out how can you collapse and gain control by utilizing some of this new technology that's coming into the market. Back to you, Seema.
Great. All right, let's talk about, we're going to talk about our last step in our methodology, which is rebalancing. But before we talk about rebalancing, let's talk a little bit about, we do in the aerospace and defense industry, we do have some, shall we say, headwinds. And so we'll talk about the headwinds, and then we'll talk about how do you use a rebalancing strategy to deal with those headwinds. Okay, Lynn, so let's talk about the aviation industry. We've sort of talked about it in we're seeing this trend with the narrow body market share over the wide body. We're expecting the average operating margin to be around 3% versus in the last decade that we've enjoyed over 11%. So, tell me a little bit about what you see in addition to that.
Well, yeah, the numbers are startling and staggering. I mean, there's just no way to put a sugar coat on this whatsoever. When you talk about the expected delivery this year, I think was 1,100 or close to 1,100 aircraft. We're going to end up delivering something like 522. Yeah. That just gives you the staggering numbers of just how serious this is. But there's some headwinds, but there's also some shift. And when there's shift in the market, there's often opportunities. Yep. Okay. So the first thing is, who's going to lead us out of this? And we talked about that a minute ago, and you hit upon the narrow body. We are not going to see the numbers come back to support the wide bodies for a while. That's just a fact. So the A320, the 737, they're going to carry us out of this. Boeing is going to feel tremendous pressure on the fact that they walked away from the mid-market, and they're going to have to address that. They opted not to bring the 757, 767 back. Airbus took a different tack. I think Airbus happened to be right. They're going to lead the way out. I think the tremendous pressure on Boeing, if you're in aerospace, look hard at that, because you're going to probably get an opportunity to help them backfill that hole that they now currently have. When that's going to occur depends on when Boeing can get the parked aircraft off the field and get their revenues up to where they can sustain development. But they're gonna focus down on the narrow body, both Boeing and Airbus. And so find out, where are you at? What positions do you have? And be on those and grow those if you can. When we talk about suppliers going under and consolidating, what suppliers are around you that you compete with that are in trouble, right? Take a hard look at that, because that may be a position that you can acquire, or you may be able to compete and win. To grow your addressable market where we are going to see things recover. It's still open for debate what the difference between Trump and Biden are going to do to the defense budget. But I would tell you that as we went into this election, most of us, including myself, believed that we would not see a substantial change. Our military has to be rebuilt. It has to have the weapons that we're building, which is a primary focus of Raytheon and others are in the missile market right now. That all has to happen. And Biden is the type of a Democrat that we've always seen that supported that. He supports our troops. So no, I don't think you're going to see a major shift there, but you aren't going to see a lot of new programs start up. I think the only program we're going to see in the defense world is going to be the bombers, because we have to replace our bombers. But look, are you on missiles? Right. Can you get on missiles by taking over positions of other suppliers that are adjacent to you? What can you do to collapse the supply chain right now to assist Raytheon? Time to market's everything for those guys. They're running as fast as they can, because guess what? If I deliver, that's money that is allocated to buying those missiles. And if I stay on track, that money will keep going. If I falter, I can guarantee you that the new House of Representatives and Senate will start adjusting the budget. So focus on and understand where those growth opportunities are that are right around you, close around you. You're either your supply chain collapse or a supplier close to you. And then take a really good hard look at M&A opportunities that will expand that reach. Am I heavily invested in Honeywell, let's say? Can I balance that out by doing an M&A that now brings me new customers such as Raytheon and others that gives that balance? Take a look at that, because there's going to be a lot of M&A opportunities that will allow you to expand your reach within your own market that you understand well. Remember, stay where you know well. because even where we know our current market, it's different, it's changing. We got to understand it again. Don't go too far out because there's too much risk. And then apply the technology expansion into that infrastructure that you've now imagined for yourself. And an extension of your facilities and your workforce and the technology that you address. Also, most of us, we all know that defense is very interested in commercially designed and built products in the defense side. Where can you reapply where you're at right now in commercial over to defense? I would say you have examples within Arizona of a number of companies that have been very, very successful at that, Honeywell being one of them, where they've taken their TCAS and their EGPWS and all of the things that were designed specifically to assist in the commercial market, and they've brought it into defense, and it's a very viable product in defense. So extensions of your technology are also areas that you need to look at. And that's how you begin to rebalance yourself, is you rebalance the risk of being too focused on one customer set, too focused on one type of area in the market. Like, let's say you're very heavily in 777X, because it was the last competition we all were a part of, right? Go back and take a look at the narrow bodies. How do I get in there? How do I balance that risk out? And as you do that, you will be, I think, pleasantly surprised at the M&A opportunities that are out there that have been bought up by some of the PE firms and are sitting there being transformed and ready for you to take a look at. So be ready and know where you want to shop. Where are those markets and those expansions that will be most valuable to you?
Yeah, I think.
Want to add something, Seema?
Yeah, I think that's spot on. You know, one of the things that we're starting to see as we're talking to you know, some of our PE clients and others, is that there's a lot of analysis and watching going on. So I predict early spring we're going to start to see some significant I would say it's hard consolidations happening at the tier 2,
Yeah.
tier 3 level, because that's just the only way to grow for both, you know, for all involved. So I would say that if you are a strategic or if you are a PE firm, you know, now's the time to start looking at your portfolio companies and to look at your own capabilities and say, where do you want to expand, and start to look for those really good synergies by early spring. Okay.
I think the other thing to add too is look for the shift in the market to actually open up opportunities. And what I mean by that is, I think if you're in aerospace and you're in the MRO market, you're looking at all these aircraft being parked. You're watching them be cannibalized. You're watching a flood in the market of spare parts. So where would that shift be the highlight for you? Well, the answer is capital asset expense. And the airlines themselves are now re-questioning whether or not they should have run away from the leasing model and the asset management model, and whether or not they could better rebalance their risk by looking at those models again. So we threw it all out. We let GE CAF go away, and we all think that's a dumb idea. But guess what? Not in COVID land. It's a good idea. And so look at that if you're an MRO. There's an opportunity, and it's starting to open up and the light's starting to shine, that the shift that a lot of MROs were taking and looking at now becomes very viable in this world.
Absolutely. Absolutely. So I'm going to do a quick time check. We're about 9:20, and we're going to try to wrap this up in a couple of minutes so we have enough time for Q&A. So, you know, I think we've hit all the topics here that we wanted to hit. You know, here's some takeaways. Capital discipline. That's really important. So don't go hunker down and say, I'm not going to spend anything and I'm just going to hold on to my cash. Well, that might be one strategy. Then you'll find yourself reacting. But if you really want to be responsive and resilient, do the homework, understand where you need to invest your capital, and then judiciously invest that capital. Going to digital journey, you're going to improve your productivity and you're going to lower your risk. That would be a high recommendation from us. M&A, focus on M&A as the fog clears so that you can position yourself for growth and for strategic expansion. Most important, upgrade your talent. Build an integrated team of multiple disciplines. Find people who have worked in different roles. Both Lynn and I have done P&L, have had P&L responsibilities and running operations. So when we find ourselves in situations, we're able to flex on both ends. And that's really what you want to do, is make sure your team is able to flex. So hardcore marketers shouldn't always be doing marketing their entire career. They have to have a stint in operations so they understand how their decisions impact operations, vice versa. And then last and but not least is improve your company's analytical fluency. Data doesn't lie, data doesn't distract, but data has to be used by humans to make decisions. And data will give you, it will allow you to give you opportunities where you can leapfrog the competition. But you have to know how to read it. You have to know how to use it and run the operation with it. Anything else, Lynn, before I move over to the Q&A?
Just adding an emphasis on that. That is the weakest muscle that Seema and I see in every company that we consult with, is analytical fluency. Mm-hmm. Having people look at the data to make the decision and get off of the anecdotal and look at what the data is telling you. I would submit to all of you, especially somebody like me, as old as a dinosaur, I can tell you what happened back when the dinosaurs were roaming the world. But I don't know for certain that that's what it's going to look like today. I have to look at the data to shift the way I'm thinking and to shift the way I'm reacting. If I constantly go on anecdotal, I'm never going to leave my dinosaur age, okay? So analytical fluency, as you're upgrading that talent and as you're bringing on consultants, that is absolutely critical to a recovery.
Great point. All right, so we want to give some credit to the folks that, the research that we used certainly wasn't all our brainchild. Good portion of it was, all the good points were our brainchild. All the numbers and facts and figures, we had a little help from our industry partners out there. With that, let's get on with questions. We'll open the floor to you, Gary, to help us facilitate the Q&A.
Excellent. Yes. So, Seema and Lynn, we do have a question in the Q&A. Are you seeing companies increase inventory to minimize supply chain risk, or continue to decrease inventories to minimize investment?
Okay, I can take that first, Lynn, and then, the answer is it depends. And it really depends on where you are in your cycle, and it depends on how much due diligence you've done on the first step of the process, which is restart. The first step of the process and the restart, you have to ask the question, where can I buffer uncertainty with inventory? Where is it applicable and where it isn't? So we do have clients who are using inventory as a buffer, but they're using it very mindfully when we work with them. We also walk into situations where clients haven't used it mindfully, and we found mountains of inventory that were like, oh, silly us, what are we going to do with this? So that's how I would say, is that yes, and it's an absolute part of the recipe, but it's not a recipe in itself.
I don't have anything to add to that. We just have to all be cognizant of cost of capital, and unfortunately tying up in inventory is that. And so make sure it's the right inventory, and make sure you understand how much that's facilitating your ability to get receivables. If it's not, then you shouldn't be doing it.
Yep.
Sounds great. I think somebody just added the billion-dollar question. How bad do you think aerospace will get, and what's the way out?
You're there, guys.
No pressure.
So take a deep breath right now. This is how bad it's going to get, and it's bad. I'm not going to sugarcoat it, but you're at the bottom, and whether it bounces back up tomorrow or the end of next week, it is on its way to recover. We see behavior right now in the public willingness to fly. We see behavior within the aerospace giants to build at a rate that the market doesn't necessarily support. We see the 737 MAX now recertified and starting to deliver. We also saw probably one of the best airlines, in my opinion, in the world. You should watch them like a hawk, because they're an industry leader. They're not one that just jumps off your tongue, but it's Alaska. And if you watched what Alaska did last week, is they bought a large number of 737 MAX. So there you go. I think we're there. I think we're bouncing back. But you can't take an industry this size with the amount of inventory that it's carrying on its shoulders. Most of you should be, it sounds funny and counterintuitive, but you should be very proud of your industry. Because look at what you're carrying right now, sitting idle assets, and you're still making money. Wow.
Yep.
That says you're resilient. You are resilient. And it's hard to believe when you're in the middle of this, but you are. It is recovering. We have a huge inventory pile up. It's not going to come back till that inventory is moving again. You know, it's going to be about 5 years, guys. But there's shiny spots throughout those 5 years. If you're an MRO, go look at asset management hard. Go look at leasing. Go look at putting inventory away off of cannibalizing aircraft. These guys are not going to come back with old aircraft. We've moved from 25-year-old aircraft being parked to 20-year-old aircraft being parked. They are going to come back in a big way with the brand new aircraft. Beyond those programs, it's coming back. It's going to be very painful and very hard. And I won't sugarcoat it. The estimate right now to get back to the 39,000 fleet that everybody coveted that was supposed to happen here any day now. Well, it's out in 2030 now. It's just a sad fact. But I would say that Boeing's under pressure to answer the mid-market. That's opportunity for all of you that are developing new products. And I think you gotta pick your points carefully, but it's on its way. We've hit the bottom.
Absolutely. I think you may have touched on this question, Lynn. It was, what do you think will happen with MROs and what do you think they should be doing? I think you encapsulated that, but is there anything that you would add to that specific question?
We have a lot of MROs that are facilitating the Air Force fleet and other military fleets. Take a hard look at that. The military is not the most efficient group of people, unfortunately. They need help. Address that, balance that. If you can have 60% of your MRO focus down on supporting your local Air Force facilities that are flying aircraft and the rest in the commercial, take a look at that. And then take a look, a minute ago we talked about inventory, right? Take a look if you're an MRO. What would happen if you started to buy your own aircraft to cannibalize and put on the shelf? Where's the value in that? And then, of course, the other one that I talked about is asset management and leasing. I think MROs were already taking a massive hit even last year, and I know they feel like it's the end and it's catastrophic. But I honestly think that reshifting and rebalancing, they could come out of this really being way more robust than they ever were. And I know, Seema, you've been involved with a lot of the MROs too. You probably have something to add.
Yeah, I think that's a great point. I think the rebalancing between commercial and defense, rebalancing between even within militaries, between domestic and foreign militaries. I think Lynn made a point earlier that's very important, which is it's going to take 5 years or so, right, for us to get there. But I can guarantee you 5 years from now, the landscape's not going to be what it was 5 years ago. So you can't sit and do nothing and wait for 5 years to pass by because you'll become obsolete as a business. What you have to do is say, where we have to watch the trends very carefully and make those moves throughout those 5 years to keep our head above water. But then once that recovery comes back in that sector, to be able to, get right on that curve and ride it. That's what we're helping our clients do. So really important, the A&D sector is, the good news is we're at the bottom, but I see the curve looking this way. And that curve, to ride that curve, you really have to be ready. And so that's what we're hoping that our clients, will start, and our, not just our clients, but folks out there who are listening to this, start to think about it in those terms.
Yep.
So Gary, just a process check. We're right at the hour, half hour here, or the hour
Yes.
here.
Yes, there was one last question, so maybe give it a 30-second answer. So given freight constraints, UPS, et cetera, due to e-com business, what are your observations on the light transportation market?
Good question. Very good question. I would say hang on. We have an anomaly happening right now. And how long that anomaly will continue is anybody's guess. And the reason why I tell everybody to hang on is we have a pent-up demand of people who are tired of being in their homes and ordering online and all of that. There's an uncomfortableness that's building up right now. We see, because of government shutdown, if you will, and keeping people in their homes, we see an unusual bump right now. I happen to be one of those people who believe that once we start lessening the stay-at-home requirements, I think the human aspect of this is going to get out and get moving again. I don't know how much we're going to have to deal with this shipping issue, or how much longer, or if it's permanent. I'm not a believer that it's permanent. I think it's an anomaly. I think it's something we can all take advantage of if we have downed airplanes or parked airplanes that we ought to take a look at. But I don't know that I would bet a lot of money into it right this minute until it shakes out. I think we're seeing a very large bump that we're not quite sure where it's going to end up. Seema, do you have thoughts on that?
So I would say I'm the opposite, right? So it's interesting. I'm one of those people who actually really enjoys the fact that I don't have to go out and buy anything. I can just order it online and I can use my time to do other things, right? So, so I guess, there are people like me out there as well. So the good news here is that none of us have the answer. We're going to see this trend is going to kind of tell us what human behavior changes are permanent versus what human behavior changes were just sort of there. I do believe that most of us want to get back to work. Most of us want to get back to traveling. Most of us want to get back to life as we knew it. I do think there's some things that are going to shift, that are going to change, just like we tell customers, right? Like I'll tell you, I haven't been in a grocery store in a long time. And I don't find myself going back to the grocery store for a long time because I love Instacart. So plug for Instacart. But not everyone is going to be in that mode. So what I would say is that I think we're going to see those tweaks. We're going to see changes, what's permanent, what isn't. And we have to be nimble enough to make changes in our business quickly. And that's what the resilient plan around resilience is, not just where you want to be 5 years from now. It's how do you create that nimbleness in your operations so that you can make those quick shifts as you need to.
Right.
We have a client that actually, it's interesting. They surprised them. They were actually, well, wait a minute. Yeah, air traffic is down, but our business isn't really that far down. Well, because a good portion of their business was coming from commercial, from freight.
Commercial.
Right. And they're actually seeing a spike in their business, and they're surprised that they're seeing this spike in their business because their mentality or their thought process was, oh, well, we support aviation, we support travel, therefore this MRO is going to see a dip in our business, but it actually didn't happen for them. So I think we're going to have to see how that thing plays out.
Yeah.
Excellent. Thank you so much. With respect to everyone's time, if there happened to have been a question or so that I missed, this was the third in a series. So the next, I believe, is on December 10th. I don't have the date in front of me, but that's an opportunity to ask questions during, and you can always, for those who were with us today, you'll receive a link to view this recording. So if there's something that you missed or want to go back on, you can certainly view that at your convenience. So in closing, I'd like to thank you all very much for taking time to learn about the MEP and how we can help your business be more successful in 2021. And please enjoy the rest of your day. Thank you so much.
Thanks, everyone.
Thank you, Gary.